Welcome to our webinar on the Inclusive Financial Integrity Toolkit. Thank you so much for joining us today. A lot of familiar names, but for those of you who are on an AFI platform for the first time, I am Madhu from the Capacity Building Unit at AFI, and I am your MC for today evening. It's really amazing to see so many of you joining us today. Let me run you quickly through the agenda for the next 90 minutes. We will start off with setting the context in which we give you a background to this webinar. This would be followed by two presentations during which we would be introducing the Inclusive Financial Integrity Toolkit, which we are introducing tonight. This would be followed by a panel discussion with people who have contributed significantly in the development of this Inclusive Financial Integrity Toolkit. And then, of course, we would have a Q&A session following the panel discussion. But we would request that you keep your questions flowing through the session so that we can keep accumulating them, but we would hope to address them at the end of the seminar. And of course, then we appreciate your feedback, and we would end the session with your feedback and evaluation. With that, we would start off with the session now, and I would invite Robin Newnham, our head for policy analysis at the Alliance for Financial Inclusion, to set the scene and introduce the toolkit to us. Over to you, Robin.
Thank you very much, Madhu, for the introduction. Good morning, good afternoon, and good evening to all AFI members and partners joining us from all across the globe, as we can see from the chat, for this webinar to introduce the Inclusive Financial Integrity Toolkit. It's really tremendous for us to see the interest developed for this virtual event, almost 200 registrants. And this is really speaking to the importance of the issue at hand today. And we're grateful to you all for making the time to join us, as well as to the distinguished panel of AFI members and key partners from whom we'll be hearing insights shortly today. Let's start with the definition before we move further. So inclusive financial integrity refers to success in achieving alignment between financial inclusion policy objectives and the goals of anti-money laundering and countering the financing terrorism. Now, we know that the complementarity between financial inclusion and AML-CFT agendas has been recognized for some time now, both by global standard setters and also by national policymakers alike. And there is a wide acceptance that financial exclusion can pose significant risks to the integrity and the safety of our financial systems. Nevertheless, practical implementation challenges in aligning the two policy objectives can arise, and they can result in unintended consequences. These need to be carefully managed and addressed by policymakers in order to avoid disproportionate exclusion, especially of women, of forcibly displaced persons, and of other disadvantaged groups, as well as the de-risking and the debanking of remittance providers. Furthermore, in a rapidly digitizing world with the increased use of digital financial services and fintech applications as well, there are new opportunities and risks that arise both for the financial inclusion, but also for the AML-CFT agendas. As we've discussed in a previous webinar, in the context of COVID-19, we've seen numerous AFI members utilize eKYC and digital identities for remote onboarding, particularly for disadvantaged and vulnerable groups, to benefit both the inclusion and the AML-CFT agendas at the same time. But we also need to be aware that the pace of technological innovation presents new risks to both policy agendas, which need to be carefully managed to protect consumers and to safeguard the integrity of the financial system. As part of their overall efforts to achieve full financial inclusion, AFI members have been contributing to global, regional, and indeed national efforts to achieve inclusive financial integrity through the Global Standards Proportionality Working Group and its subgroup on AML-CFT. This subgroup has been ably and indeed expertly led by Bangladesh Bank to drive the development of the Inclusive Financial Integrity Toolkit that we'll be hearing about today, with technical support from Cenfri, our partner in this initiative. And we would really like to take the opportunity now to thank them for their excellent collaboration and support in this initiative. We'd like to also thank our key partners for providing comments, inputs, and additional support into the development of the toolkit, including the Financial Action Task Force Secretariat, the FATF-style regional bodies, AFI's public-private dialogue partners, and FSD Africa. Many of these key partners are represented here today, and they'll be participating in the panel later. Their insights and support have greatly assisted the process of technical development of the toolkit, whilst also ensuring complementarity of the recommendations to existing standards and guidance. The toolkit has been formulated with reference to the FATF recommendations and related guidance, and it's based on the empirical experience of AFI's membership. The toolkit will facilitate additional peer learning amongst members, but also provide a mechanism for contributing their experiences and perspectives into global and regional fora for the advancement of inclusive financial integrity. Shortly, we're going to hear more detail on the contents of the toolkit from two of the key contributors, Mariam Zahari from AFI and Barry Cooper from Cenfri, before an ensuing panel discussion on the progress made and the challenges remaining to achieve inclusive financial integrity in practice. First, however, we're going to be treated by a short animation that will give you a sneak preview of the toolkit before its publication on the website during this webinar. So with those remarks, I trust you'll find the presentation and panel discussion today insightful and informative. And I would now like to please call for the animation video to be shown. Thank you very much.
Thank you, Robin, for that introduction. Let's now unfold and see what's inside the toolkit. And for that, let's move on to our second part of the webinar. And it's my pleasure to invite Mariam Zahari, Policy Analyst with AFI, and Barry Cooper, Technical Director at Cenfri, to unfold the Inclusive Financial Integrity Toolkit for us. Over to you, Mariam.
Thank you, Madhu, and warm greetings to all. It is a great pleasure for AFI and Cenfri to present the Inclusive Financial Integrity Toolkit to you, which we have been developing together under the leadership and guidance of the members of the AFI Global Standards Proportionality Working Group and its AML-CFT subgroup, as Robin just mentioned. We have structured the presentation so that I will speak to the purpose of the toolkit and the peculiar challenges it is intended to address, while Barry will speak to the ways in which it offers practical guidance for financial policymakers and regulators to tackle these challenges towards effectively aligning financial inclusion and AML-CFT and ultimately achieving inclusive financial integrity. And here, when we say inclusive financial integrity, again, we refer to a state of success in achieving sound alignment between financial inclusion and AML-CFT policy objectives, which is essentially attained when a country has established a safe financial system that has adequate and effective measures in place to identify, assess, understand, and mitigate MLTF risks, and then to act as soon as those risks have been detected, and that the country is just as equally able to provide greater access to and usage of quality formal financial services in a way that enhances the livelihoods of the most disadvantaged and vulnerable segments of our populations. And that drives inclusive, sustainable development that leaves no one behind. Hamizi, if we can have the first slide, please. And so the purpose of the toolkit is to provide practical guidance on aligning financial inclusion and AML-CFT policy outcomes with respect to the formulation and implementation of policy and regulation for inclusive financial integrity. It draws on the practical experiences of AFI members and insights gained from peer-to-peer learning discussions during AFI member trainings on AML-CFT and financial inclusion in order to meaningfully reflect the realities of our developing and emerging countries within the network. And by doing so, the toolkit complements the global AML-CFT standards and supports their implementation by addressing challenges which impede effective implementation. For instance, it cites specific successful implementation experiences of AFI members in advancing financial inclusion and AML-CFT together. And I provide you with two examples. The case of Costa Rica, where after a mutual evaluation was conducted, AML-CFT stakeholders started focusing attention on simplifying customer due diligence when opening entry-level accounts. And the central bank supplemented that by creating a free application that enables users to transfer money from one account to another, all to enhance the use of digital financial services. And in Tanzania, the government and the Bank of Tanzania worked closely with the Financial Intelligence Unit on a national risk assessment to establish the level of risks that can be posed by refugees in the financial system, which helped to inform both their second national financial inclusion strategy and risk-based tiered CDD processes. Next slide, please. As the previous president of the FATF stated in his end of presidency statement, the challenge many countries face today is not the absence of comprehensive global standards, but the effective implementation of those standards. And we have found this to be true. So to inform the development of the toolkit, AFI members supported the crafting of 17 country case studies across all the AFI regions to identify, examine, and understand the implementation challenges that our members experience when aligning financial inclusion and AML-CFT within the most important processes of an inclusive financial integrity policy cycle. First, there is a challenge for financial inclusion and AML-CFT stakeholders to collectively define a shared vision of success in achieving inclusive financial integrity, including how to measure impact towards that vision. Second, there is often limited alignment and synchronization between financial inclusion and development activities on the one hand, and AML-CFT activities on the other. These then cascade down to the challenge of aligning financial inclusion and AML-CFT in processes like national risk assessments, during national financial inclusion strategy formulation, and subsequently in the development of regulatory frameworks for inclusive financial integrity. For example, it is often difficult to harmonize the timetables of national risk assessments and AML-CFT strategies with financial inclusion diagnostics and national financial inclusion strategies in a manner that they can inform each other for effective policy making. Next slide, please. Fourth, there are challenges in ongoing customer due diligence processes, especially to onboard previously financially excluded segments of the population, such as women and forcibly displaced persons who may not have standard KYC documentation for various reasons. There was therefore a need for peer-to-peer learning on the successful approaches to the implementation of simplified due diligence, as well as remote KYC that leverage on digital IDs. Fifth, a number of the countries studied experienced challenges in implementing ongoing risk-based supervision due to a persisting reliance on a rules-based approach, as well as difficulty in integrating financial inclusion considerations into their mutual evaluations. And finally, there are cross-cutting challenges related to data and coordination throughout the whole inclusive financial integrity policy cycle. For instance, in collecting data for national risk assessments and mutual evaluations, and to maintain effective multi-stakeholder coordination for these processes. This figure on the right, for example, demonstrates the common challenges faced when conducting NRAs, which results in the unavailability and poor quality of data, and then hampers the effective application of the risk-based approach. So I will stop here and invite Barry to now share how the toolkit provides guidance on dealing with these specific implementation challenges. Thank you, and over to you, Barry.
Thank you, Miriam, and good morning, good afternoon, and good evening, everybody. I'll just take you through a couple of the challenges as noted, and we'll look at some of the insights that came from this rich toolkit that was put together with the members. If you can have the next slide, please. So one of the first challenges is defining a shared vision of success in achieving inclusive financial integrity. And so what we've seen was key here is to define financial inclusion and to define financial integrity, but in the specific context of that jurisdiction. That was most important. Success means aligning financial inclusion and AML-CFT in planning, implementation, monitoring, and review. So it's alignment throughout the process. And only by understanding and aligning the vision of success informs what outcomes to measure and therefore the success. So it might be it's intuitive that you can really only measure what the success that you want to see. Next challenge, please. So the challenge of limited alignment and synchronization between financial inclusion and development activities on the one hand and AML-CFT on the other. What we've seen is some of the key elements we've seen coming out and insights is that a well-developed AML-CFT policy, strategy, and accountability framework is essential, but also accountability for AML-CFT is critical for enhancing government efficiency and governance and efficiency. And those are key elements that underpin development outcomes. Next slide, please. So another challenge noted is achieving inclusive financial integrity in national risk assessments and national financial inclusion strategies. So what you've seen is that to ensure that the particular national risk assessment framework or model a country is using, you can be using a World Bank model, the IMF model, or even a proprietary model. But the most important thing is that it's properly contextualized to the country's realities. Otherwise, you're solving somebody else's problems in your own country. So that we've seen is a key element that we've noted. Also, to align national risk assessments and national financial inclusion strategy timeframes in development, implementation, and review. That's easier said than done because these are on different schedules. And where that's not possible, then at least aligning monitoring and review frameworks and the periods of review is key. Next slide, please. One of the key challenges is inclusive integrity in ongoing customary due diligence processes, particularly for onboarding. Now, often this is just a symptom of a broader systemic issue, but some of the key insights we've seen input in the toolkit together is that regulators and FSPs need to leverage technology to the fullest extent, and the FATF have provided guidance recently in April to this. That includes RegTech, ID proxies, biometrics. The list can go on. Identity proofing, as per the FATF guidance, and its digital imperative is key for COVID-19 recovery. But also, if you're wanting to include vulnerable groups such as women and forcibly displaced people that don't necessarily have access to the requisite documentation, identity proofing and these processes are vital. So outcomes-based regulatory frameworks rather than input-based are key. What that means is that, you know, it doesn't matter if you've got a whole list of scanned documents and you've counted them and you complied with them, if you're not achieving effective money laundering, terrorist financing, risk management. So it's the output that's more important rather than the input. Concentrating on what is important aligns with your success factor. Next slide, please. So the challenge of implementing risk-based supervision in most of the jurisdictions that we spoke to, they typically have quite a structured, rules-based, very rigid supervisory process. And it is almost impossible to achieve a risk-based outcome or risk-based approach with a very, very rigid supervisory process. And so what you've seen is where risk-based supervision has been implemented, it can positively influence the behavior of supervisors and institutions to innovate for inclusive integrity. Innovation takes time. The only way you free up time is if you appropriately apply your supervisory capacity to the risks. So that's what we've seen. So it enhances innovation and appetite and adoption of robust risk-based proportionate approaches. It's very, very difficult to be that effective without a risk-based supervisory approach in the background. Next slide. I'm just going through these at quite a high rate because they are quite detailed. So the next challenge is data collection and analysis, multi-stakeholder coordination. So this is a universal cross-cutting issue. Data collection, data information is key to most of the sub-processes and strategies. What we've seen is that just from the members, we've seen that data governance is very important, as is the use of multi-stakeholder fora, where you can collaborate across different silos, particularly across government silos and with private sector silos. So from some of the members, we've seen that cabinet directives are very, very effective, but they're hard to come by. But those are very effective, as is tapping into existing statistical ecosystems for information and data. Interagency coordination is also key. We've seen that in enhancing outcomes for mutual evaluations, national risk assessments. You know, it's rare, if not impossible, to achieve a positive outcome in terms of evaluation or a defective risk assessment without considerable interagency coordination. And we revert right back to the beginning in defining success, but defining success and clear responsibilities for stakeholders is key for data governance and collaboration as well. This is one of the most universal issues that we have is coordination and informational data. I'd like to thank the AFI members, FSD Africa, and also John Symington for all for the opportunity to develop this toolkit, and particularly to develop a resource out of developing economies for developing economies. Thanks. I'll hand back to you, Mada.
Thank you, Barry. Thank you, Mariam, for the overview of the toolkit. To all the participants, the toolkit is now available on the AFI website, and the link to the publication has also been posted in the chat for your reference. If you have any questions on the toolkit, please post it in the Q&A section, and we will take it up later during the panel discussion or the Q&A session after the panel discussion. Let's get started with the third part of our session today, which is the panel discussion, and it's my pleasure to invite our esteemed panelists on board. Our first panelist, Alejandra Olivares, General Director of Oversight Process and Methodologies from CNBV Mexico. Ramizul Islam, Deputy General Manager, BFIU Bangladesh Bank. Nomcebo Hadebe, Principal Finance Officer, Ministry of Finance, Eswatini; John Muvavarirwa, Senior Financial Sector Expert, ESAAMLG; Shana Krishnan, Policy Analyst with the FATF Secretariat; and Mark Napier, CEO, FSD Africa. The panel will be moderated by Robin Newnham, who is the Head of Policy Analysis at AFI and also the Policy Manager for the Global Standards Proportionality Working Group. Welcome back, Robin. Over to you.
Thank you, Madhu, and many thanks indeed to our presenters, Barry and Mariam. So we're going to move now straight into the panel discussion. And we've heard during the presentation of the toolkit that despite the overarching complementarity of the goals of financial inclusion and financial integrity, nonetheless, unintended consequences can and do arise if sufficient attention is not paid to the alignment of specific policies and also processes pursued under these goals. And practical tools and guidance that are informed by the empirical reality of peer learning really can help address this challenge. So in this panel discussion, we're going to hear the perspectives from 3 regulators in the AFI network, their story in advancing inclusive integrity. And we're also going to garner viewpoints from the standard setters and from market facilitators. And of course, the panel members, we thank them not only for their participation today, but also the invaluable support they have provided throughout the process of developing this toolkit. And so the panel members were already introduced to you by Madhu. I'm going to give each one of them around 5 minutes to set out some opening thoughts on this topic and how the toolkit can really be utilized in their work. That's then going to be followed by a Q&A session. So please already do think of questions you'd like to ask as the panelists are speaking. And you can type those into the Q&A box that you see on your screen. And please do highlight for us there your name and organization and also who you're addressing your question to. And then we'll come to that after the panelists' opening statements. So with that introduction, I would like to start first with Nomcebo Hadebe from the Ministry of Finance of Eswatini. And Nomcebo, if I could ask you first, how has the Kingdom of Eswatini sought to align financial inclusion and AML-CFT policy objectives with the goal of inclusive financial integrity in mind? What progress have you achieved, but also what are the key challenges remaining?
Thank you, Robin, and good afternoon from, I hope you can all hear me. I'm from the southern part of Africa. I'm in the Kingdom of Eswatini. My name is Nomcebo Hadebe, as Robin has highlighted. I'm still a principal finance officer at the Ministry of Finance, but have recently been seconded to our Center for Financial Inclusion, which is actually ironic in terms of the topic we are discussing, how to achieve financial integrity within an inclusive space. I think one of the key policy objectives we've had while I was with the ministry was to say we want to work within a 4-pillared framework: inclusion, stability, integrity, and the protection. So it ultimately states that inclusion is important to achieve an integrity in the financial system. As you have highlighted earlier, Robin, one of our biggest risks is what we do not know, which sits in the exclusion, the people that we've excluded that are either forcibly excluded or voluntarily excluded in the formal financial system. I think it also comes, the topic comes in at an opportune time where we are undergoing a lot of uncertainty in terms of COVID. The risk factors, did we really analyze the risk of COVID, which we could actually classify as proliferation financing once we start to interrogate it further? What has Eswatini done about this? We conducted our national risk assessment, which we completed, I think, late last year, which was also ironically the start of our mutual evaluation process, which we are supposed to be within. In fact, this week we were supposed to have our on-site, and which is not going to happen at the moment. We've had to postpone to September because our borders are currently closed. What has been our biggest success during this is all of these policy objectives are actually the purview of the Ministry of Finance. So I think this touches on a coordination issue. AML-CFT sits in the Ministry of Finance. Financial inclusion sits in the Ministry of Finance. Now, how has that really helped us? We have been working together, not to say without the challenges that we will elaborate on later on. The policy objective is sitting with the same coordination unit. So that is one way we are trying to establish financial integrity. Obviously, it's been a painful but worthwhile experience. We've also had the experience of moving from a rules-based regime to a risk-based regime. And one of the fundamentals was not understanding the understanding of the risk that we had. But honestly, the one thing that has been beneficial is to say that when you align your AML-CFT policy with your financial inclusion policy, you tend to achieve more because the parameters are almost complementing to each other. I think if one of my opening statement is our biggest risk is not knowing what we do not know. So basically the excluded population of any community. I don't know, Robin, if I'd like to stop there for now before I start going on and on. Unfortunately, I'm passionate about both subject matters, so yeah.
Thanks so much, Nomcebo. That's an excellent start, and I'm sure we'll be coming back to you more later on. But now I'd like to turn for our second perspective from an AFI member regulator, and this time I'll invite Ramizul from Bangladesh Bank, who of course was the subgroup chair of the AML-CFT subgroup that has overseen the development of this toolkit. But Ramizul, I'd like to ask you actually now about Bangladesh's own experience. How have you sought to advance inclusive integrity? And perhaps you could particularly talk to how you've sought to do that in the national risk assessment and mutual evaluation processes. But I think we'd be interested to hear too how you've tried to include considerations around vulnerable groups in that work particularly. Thank you.
Thank you, Robin. Thank you, speakers, panelists, moderator, AFI partner Cenfri, and participants. Greetings from Bangladesh FIU, Bangladesh Bank. First, I'd like to thanks to GSP working group to invite me in this virtual launching ceremony of the Inclusive Financial Integrity Toolkit. I also like to thanks to colleagues of those countries who submitted their country case studies and actively participated in drafting this toolkit. Actually, financial inclusion and an effective financial integrity regime can and should be complementary national policy objectives, and Bangladesh is not an alternative one. Bangladesh designed its AML-CFT laws, rules, and regulations to minimize unnecessary adverse effects on financial access and to promote both financial inclusion and financial integrity. Our third round mutual evaluation was conducted in 2015, and the final report was adopted in 2016 at APG plenary meeting. Before the mutual evaluation, we conduct our NRA, that is the National Risk Assessment, in cooperation with our Anti-Corruption Commission, CID, and other stakeholders. It was a time-consuming and a huge and a comprehensive work, and it's really a good job for us to identify the risk and the national risk to formulate our foregoing policy measures. The risk assessment helps Bangladesh to design appropriate and proportional AML-CFT controls. It helps to determine the nature and scale of MLTF in the country, as well as vulnerabilities in existing controls. For the vulnerable and disadvantaged groups of people, we offer several customized products. Actually, before formulating any policy, we identified the vulnerable groups of Bangladesh. So we customize some products for that group only, like farmers, hardcore poor people, freedom fighters, distressed people having grant from Hindu Religious Welfare Trust, small life insurance policy holder, physically challenged persons, including blind people, enclave lawyers, street urchin, and working children, school banking. These are actually gender neutral products for Bangladesh. But we have also some women-specific products like hardcore poor women entrepreneur, small and micro traders, and also some other products like for the garments workers, cleaning staffs of the city corporation, like this, and also the leather industries also. And these are mostly occupied by the vulnerable people like women. You know that in Bangladesh, actually, we have a gender gap, like 36% according to our last report. But policy actually gives us to overcome these issues. One thing that I can share with you that in last COVID-19, last 3 months, we opened a lot of accounts, especially the MFS accounts. And you know that because of the policy flexibility, the gender ratio is 65% and 35%. 65% is women that are opening in the MFS account, and 35% is the men. Why? Because as a policy maker, we actually introduced eKYC in the beginning of this year, and also if any hurdle taken place there, they can also open account without eKYC. That is the manual procedure also open to open these accounts. So this is the main thing what we are doing for the financial inclusion for the vulnerable people. And these accounts or these products have some incentive because they are getting the highest profit or interest and no minimum deposit requirement and minimum initial deposit like 10 taka. It is $18 per account. And we also follow the risk-based approach. So financial inclusion product, according to our NRA, financial inclusion products are the less risky products. So simplified KYC is appropriate for this. But to ensure the integrity of the financial system, we keep open for the screening mechanism, the supervision. That is also the risk-based approach we following in our supervision. And record keeping is essential, and it is open for all accounts. And the reporting, that is the reporting of the suspicious transaction or activity report. So to make it ensure that the financial inclusion products that will not hamper our economy and ensure the integrity, we actually keep it open for them that in each and every 5 years they can update the KYC for these inclusion products only. And for the high risk accounts, that can be updated for 1 year. So it's the flexibility of our policy. And screening mechanism, because there is a terrorism financing or terrorist activity might be taken place, and we have also the global perspective. So even resolution like 1267 and 1373, we have to comply it. So it is applicable for all accounts, and we actually ensure that the financial institutions like banks and non-bank financial institutions, MFS, they have the IT-based mechanism to screening the account. So it is taking very few minutes, few time and cost to screen screening the accounts. So it also ensures the integrity of our financial system. And the supervision, because the agents, there's a huge number of agents. So we mentioned for our the service providers that you have to audit 5 to 10% agent points so that they are doing their business in the right way according to our rules and regulations. So they do it. And apart from this, FI also time to time supervise them. And for the record keeping, we have a very strict norms that they have to keep records for 5 years, at least 5 years. So we keep it very strategically. And the reporting. So reporting is not only the high risk account, also the financial inclusion products. If they find any suspicious activity or transaction, they also have to report to the FIU as an STR or SCR. So like this way, we actually ensure our financial integrity in the financial system. So FATF actually rightly mentioned that financial inclusion, exclusion is a risk to financial integrity, and we also believe it. And so we tried ourselves to ensure that most of the people come under the financial system. To ensure that the AML-CFT framework is addressing appropriate risk while supporting financial inclusion, Bangladesh regularly consult with the financial service provider, law enforcement agencies, financial regulators, the FIU, and other key role players. And the process is a continuous one. Thank you.
Thanks so much, Ramizul. I think it's really important that although we talk about alignment in the vision and the interagency coordination, it's also important to take it down to the grassroots and look at what's really at stake for vulnerable populations that are excluded from the financial system. I'm sure we'll be coming back to you again shortly, Ramizul, but I'd like to turn now to Alejandra from CNBV Mexico. And when you're reading the toolkit, you'll see there a very nice case study that has been submitted by CNBV that details how technology has actually been used as an ally in this instance to advance the achievement of inclusive financial integrity through SupTech. So Alejandra, could you please tell us a bit more about that example and what lessons and insights could you share with the rest of the network on your experience of SupTech for inclusive integrity? Thank you.
Yes, thank you very much for the introduction. So first of all, I would say that we know that technological tools and data to support financial activity are supposed to bring very important benefits. They have allowed growth and innovation in the financial services. And they have also driven the emergence of new business models. So data also play a crucial role for a better understanding of customers' preferences and behavior, and the access and use of technological tools and innovative applications at low cost can improve general levels of financial inclusion. So it also has the potential to lower barriers of entry to the financial service market. So it is important also to know that it's a double-edged sword technology. Why? Because potential inclusive technologies can also be susceptible to abuse for ML-FT purposes. Technology and data might also raise challenges in terms of data policy, protection, regulation, and supervision challenges. But it is important to know that technology is available for everyone, and it also offers opportunity not only for service providers, financial service providers, but also for financial authorities. And there is when we are talking about SupTech, supervisory technology, because now regulators all over the world are exploring the potential of new technologies to improve methods and processes for supervising. So the access to data and analyze them in an effective manner will help to improve supervision in a very important way. So what is SupTech is the use of big data and artificial intelligence by financial authorities to support their activities. So the case that we shared here in the document is the CNBV case, where we have been working in two main areas of SupTech. one of them is data collection and the process of information, and the other one is data analytics. So there are many areas of application for SupTech. It provides a proactive monitoring of risk and compliance of financial institutions. And the main areas are market surveillance, money laundering, and financial crime prevention. So here we are dealing with financial integrity, prudential supervision, financial stability, and emerging risk signaling. What we have been doing in these last years is that we have developed a SupTech platform that will allow the reception, storage, validation, and the automated processing of information. We are starting with fintech institution, the financial technology institutions, and also for AML/FT supervision. And then we are scaling it for all the sectors that the CNBV is supervising. And also in terms of data analytics, for a more effective supervision, we have been working in the adoption and implementation of advanced data analytics, and we have been supported with different institutions. But the thing is that we are applying this to predict behavior, classify our supervised entities, because it allows a proactive monitoring of risk and compliance. So when we are using SupTech, we are moving from basic analytics, from descriptive analytics that is like a retrospective understanding of events, to advanced analytics that provide the optimal use of data and also prediction. So we are becoming more efficient. So we are sharing this in the toolkit, but also we share some practical lessons for other supervisors that have been learned from CNBV's experience, and it's like how we have been implementing those. And first of all, these practical lessons are, the first one would be identify organization capabilities that need to be developed and enhanced. The second one is very important to change the culture of the regulator. You have to promote a culture of innovation and assign a key leadership role to foster organizational change, because you are changing paradigm. The third one would be to collaborate with other financial authorities, because there are very interesting case studies in terms of SupTech, and different authorities are really approaching SupTech in different ways for all the areas that I have been commenting here. The other one would be, it's very important to look for specialized support, because these are new abilities that have to be learned and have to be, and you have to train the people in the institution, and you have to select highly capable multidisciplinary groups that can demonstrate a strong vision for transformation, because we are talking of innovation. It's also very useful to create innovation labs. Also, you will need to develop and improve technical capabilities within the institution, such as data science, data engineering, and also you will need to identify robust technical staff with relevant backgrounds in statistics and numerical background. Because you will also need to complement the prudential capabilities with these technical and analytical backgrounds. And I think that this is very useful, that you do not need to change everything from the start. You might be better if you take a gradual approach to adopting and applying SupTech. including related infrastructure. You don't need to start with everything, and you can build it in accordance with supervisory needs and advances. And I think that last and not least of these practical lessons is that you need to recognize the role and knowledge of supervisory experts, because SupTech is very useful, but it will never replace the capabilities and the strong analytical skills and prudential knowledge of your regulators and supervisors. So you will use technical tools to complement your knowledge, but it will never replace it. So so technology should be used by authorities to enhance supervision, become more efficient, and acquire new capabilities. So we are working on this. We have been working for 3 years, and we are scaling it to all our supervised sectors. Thank you.
Thanks so much, Alejandra. I think that's a really nice example of how the double-edged sword, as you put it, of technology has been deployed in a very careful and considered way to advance both financial inclusion and also AML-CFT objectives. And that's a nice point you finish on, that we really need technology working together with humans. It's not a case of technology replacing humans in order to get to inclusive integrity. Now, I'd like to turn to Shana from the FATF Secretariat for the next intervention. And I think it's important to recognize here that the FATF has publicly acknowledged the complementarity of financial inclusion to its own mandate. I think as far back as 2012 or even earlier, with guidance on financial inclusion and AML-CFT that's been revised several times over the years. So I'd like to start off by asking Shana, in the view of the FATF, how does financial inclusion really help to enforce financial integrity? And how can tools and guidance such as the Inclusive Integrity Toolkit released today support effective implementation of the risk-based approach? Thank you.
Thanks, Robin, and hi to everyone out there. A lot of what I wanted to say today has already been said, which for me is excellent news, because it means that we all kind of see this complementarity and are working to put it into action. And as Robin sort of said, FATF really strongly believes that these are complementary objectives. We don't see them as competing policy objectives, because bringing more people into formal financial services actually extends the reach of the AML measures that we're asking countries to put into place. And it's important to highlight as well that it increases the transparency of our financial sector. It also increases the traceability of transactions of financial activities, which, if we're being realistic, are probably happening in one way or the other. And it stops us from kind of putting our head in the sand when it comes to a lot of the risks that are probably taking place in the informal economy. So as everybody has said today, we're completely on board, and we thank the AFI for putting together this initiative. In terms of some of the problems we've seen in the past with countries and in terms of implementation, we've talked about some of them already, in terms of understanding of risks, understanding of the informal sector and how it kind of interacts with the formal financial sector. And we've seen that this lack of understanding can sometimes lead to an over-application of customer due diligence, what we sometimes call taking a zero tolerance approach or a tick box approach. And basically what this results in is turning people away from the formal financial sector, people that don't have identity documentation, and basically leaving them with no option but to go to the informal sector, which is more often than not completely unregulated. So as Robin also mentioned, we've spent quite a lot of time looking at this issue and trying to see how we can apply the AML-CFT rules in a way that promotes financial inclusion. And so we issued guidance in 2013 and 2017 to do this. And as some of our colleagues mentioned before, the FATF has very clearly set out that financial exclusion is itself a source of money laundering, terrorist financing risk. And that's the way in which we're encouraging countries to look more closely at this. A few people also mentioned that we've published digital ID guidance earlier this year, and that guidance actually includes a chapter on financial inclusion, and it talks about some of the issues that we raised previously, such as tiered CDD, doing ongoing monitoring of accounts, or introducing limitations on accounts, or establishing identity over the customer's life, basically looking at their transaction history and helping and using that to support their identity. It looks at those sorts of things and tries to apply them in a digital context. And so that hopefully will also kind of spearhead some more financial inclusion activities. And as others have mentioned, in the COVID-19 context, this has really served as an accelerator for all countries looking more closely at digital identity. And just one other thing I want to mention is, in addition to guidance, something that we're always looking at in terms of, encouraging change is the mutual valuations. And this is really important because a lot of the problems that emerge aren't necessarily to do with the international standards, which do encourage flexibility, but actually with the national implementation of those standards. And the FATF and the FATF-style regional bodies, some of which you have today, are actually working with the assessors to make sure they ensure that financial inclusion is emphasized during the mutual valuation process. And one of the things that's really important as well is the recommendations of those reports. I review all immediate outcome 1, that's the risk section of mutual valuations, and I recently saw a report which had, a 98% of the economy was cash-based and informal. But in terms of applying its risk-based approach, the country hadn't thought about financial inclusion mechanisms to see how they could kind of deal with some of the risks that they're seeing in the informal economy. And those are the sorts of issues we're trying to address through the mutual valuation process. Just as a last point, we've seen that taking a risk-based approach really requires skills, it requires knowledge, it requires experience and confidence. And from the governments, we ask for greater coordination, innovative thinking, and clear guidance to the private sector to really help them implement these mechanisms as well. And I really want to thank the AFI and the toolkit, which highlights some of these challenges, but also some of the potential solutions that countries have been taking. And it's really good to see the sections on the risk assessment and the supervisory practice. The FATF's also developing guidance right now on risk-based approaches to supervision. And we'll look at this document and we'll also look to your experiences as well in how we can improve that. So congratulations again, and happy to take any questions.
Thanks so much, Shana. That's excellent. And I can see in the Q&A, there's already 1 or 2 references there to FATF standards. So I think we'll be coming back to you again shortly. But I will turn next to our colleague, John, from the ESAAMLG Secretariat. And ESAAMLG, as the FATF regional body for Eastern and Southern Africa, of course, has a key role to play in the implementation of standards and also in the mutual evaluation process. So John, I'd like to ask you from your perspective, how can this toolkit really support effective implementation of the risk-based approach? And how do you consider it can be applied in the context of the unique challenges that you see in your region? Thank you.
Thank you, Robin. I would like to first of all thank you, AFI and Cenfri, for coming up and developing this very useful and practical guideline, which is a guidance aiming to balance financial inclusion and AML-CFT outcomes. I am also happy that it has involved all the relevant stakeholders. It is very apparent and it is very clear that from the what FATF has just said, both FATF and the FSRBs their focus since the introduction of the new recommendations in 2012 is on the application of the risk-based approach, which is key to enhancing financial inclusion. And indeed, like what you said, the region, the ESAAMLG region is unique, and it has its own unique challenges. And what us as ESAAMLG are trying to do is to work with the region so that we can also enhance financial integrity and financial inclusion. So let me start by taking you through what we have observed as ESAAMLG through our mutual evaluations. As ESAAMLG, we have assessed 9 member countries, which is like 50% of our member countries in the region. 5 are in different stages of assessment at the moment. And what we have observed through our mutual evaluations, firstly, I will start in the private sector, where we have actually noted a high penetration of mobile money operators, providing mobile money platforms like the Airtel Money, Tigo Pesa, EcoCash, MTN Money, Mobile Money, M-Pesa, which have played a very significant and important role, not only in promoting financial inclusion among the previously unbanked, but also bringing them into the formal financial system. Although use of cash is still dominant in the region, the MNOs have to some extent assisted in increasing accountability and transparency of transactions that can be easily traced should their source be suspected to be illicit. So most of these mobile money service providers, they apply CDD measures that take into consideration different types of customers that they serve. Our experience is that they have tiered systems in place where during onboarding, they request only for a copy of ID or a photo, a passport size photo, which in most cases is taken at the premises. And the KYC requirements, they become more stringent as the tiers increase. Some member countries have also developed innovative solutions for CDD. For example, the use of biometrics in CDD onboarding processes. So you will find out that biometrics in combination with other attributes remove the need for customers to carry paper-based documentation and provide them with an alternative way to prove their identity. Similarly, banks have also introduced some financial inclusion products in the form of e-wallets, which allow customers to send money from their bank accounts to mobile phones of any individual, even those without bank accounts. Also, agents banking has also played a significant role in financial inclusion as it provides greater geographical coverage by following people closer to where they live. For example, here in Tanzania, we have CRDB Bank, which have actually reached in many different regions of the country. But now, although this is a promoted financial inclusion, we still have the biggest challenge in the region, which relates to undertaking of MLTF risk assessment before the launching of the product. That one is a big challenge that most of the member countries and financial institutions are experiencing. So some financial institution products, they pose a higher risk than others, especially those that are of a cross-border nature. So you will find out that because most of the member countries, they don't undertake any MLTF risk assessment before launch. There has been a low performance when it comes to recommendation 15 of the FATF recommendations. So in view of the toolkit that AFI has just come up with, the toolkit will play a significant role in guiding the private sector to ensure that risk around these new financial inclusion products is identified, is assessed, and understood before being launched to allow for proper application of the risk-based approach. And when it also comes to supervisors, we have also noted some challenges in the region which relates to risk-based supervision. the mutual evaluation conducted have actually shown that while the implementation and application of risk-based supervision is still emerging within the financial services sector, in particular, supervisors for banks, the supervisors for other financial institutions, we're talking of our insurance, our financial sectors, most of them, they are still at the embryonic stage of implementing risk-based approach, not to mention the DNFBP sectors, which have not started implementing risk-based supervision. Generally, supervisory authorities have not adopted robust systems to assess money laundering and terrorist financing risks in individual financial institutions and across sectors, which would inform an integrated and comprehensive risk-based supervision consistent with the dynamics of the sectors they supervise. So you will find out that in terms of most of the countries have done national risk assessments, but they have not gone down to do thematic risk assessment or sectorial risk assessment or any other type of assessment that would assist them to risk profile their institutions. So the limited understanding of the money laundering and terrorist financing risks and predicate offenses by competent supervisory authorities have led to a silo or rules-based application of supervisory tools without taking into consideration the uniqueness of each sector or each customer, service, product, or geographical area in respect of money laundering and terrorist financing exposure. The rules-based approach entails silo application of CDD measures, forgetting variances in threats and vulnerabilities, and this is a tendency of reducing the level of financial inclusion. In addition, issuing of appropriate guidelines or appropriate risk-based approach guidelines by supervisory authorities to reporting entities is still a major area of possible improvement. In this regard, the tool will actually provide a good window of opportunity which member countries and supervisory authorities can take advantage of to develop adequate AML-CFT systems to identify, assess, and to have a deep understanding of the money laundering and terrorist financing risk of the sectors they supervise, which is the basis for the implementation of the risk-based supervision. The steps clearly articulated in the toolkit allow for the development of the necessary risk-based supervision tools. We're talking of our manuals, we're talking of our policies, we're talking of our procedures, which are necessary for the assessment of each institution's risk profile. It further guides, I'm talking of the toolkit, it further guides member countries, supervisors, and financial institutions on AML-CFT considerations to be made in the application of the risk-based approach towards enhancing inclusive financial integrity. For example, you will find out that the toolkit talks about supervisors can consider deep dives in high-risk areas or institutions while applying lighter supervision of low-risk institutions. It's only talking about simplified measures versus EDD measures, which is very critical for purposes of applying risk-based approach. This will assist member countries to enhance and strengthen their supervisory tools and frameworks towards RBS, which is a shift from the traditional rules-based or one-size-fits-all approach to supervision. The toolkit also prepares member countries in advance for the oncoming mutual evaluation exercises. That is for those that have or that are yet to be assessed, and follow-up processes for those that are already assessed. The toolkit has covered all the key aspects of the sound risk-based approach, beginning with assessments. We're talking of the NRA and also AML-CFT policy formulation, strategies, accountabilities, the issue of political will, in addition to issues of indigence or domestic cooperation, which are key to both TC and effectiveness assessments. Given the RBA challenges in the region, policy involvement cannot be overemphasized. With all of these positives in mind, let me conclude by saying that it is one thing to have a toolkit. It is also another thing to take advantage of its contents and put them to good practice or to good use. it is my hope that going forward and being equipped with this, this unique tool, a toolkit, we will see good results from our members when we do our mutual evaluations, or when we do our follow-up, when they submit their follow-up reports. Thank you very much.
Thanks so much, John, for that rich detail from the ESAAMLG perspective, and also for your very practical suggestions as to how the work can be taken forwards from this point. So now I'd like to come to Mark Napier, CEO of FSD Africa, and thanks for waiting very patiently, Mark, for your turn. So we've heard, of course, already of the importance of interagency coordination in this agenda, and I think therefore market facilitators such as FSD Africa play a really critical role in driving inclusive financial integrity in practice. So Mark, what would be your sort of vision for inclusive integrity in Africa? And how do you see the toolkit as contributing to getting us to that point? Thank you.
Thanks, Robin, and thanks to AFI for having me on this call. I really appreciate it, and well done to AFI and Cenfri for getting to this very important milestone. I would also just like to thank all the individuals and organisations who've been involved in the journey up until now, because I know that there's been a lot of we often tread on each other's shoulders, don't we, to get to these sorts of moments, and I think it's really right to acknowledge the efforts of the people who've gone before, and also in that context, I'd particularly like to congratulate some other members of the FSD network actually for the work that they have done in this area and continue to do. So anyway, well done to everybody on this. It's really good outcome. Very briefly, why did we do it? And I think it will help to explain, our role as a market facilitator. Fundamentally, financial integrity is central to our vision at FSD Africa of a sustainable future. So we strive for a sustainable future as one of the key objectives of our strategy, alongside job creation, alongside getting people access to basic services. So sustainability for us is obviously green, but it is also about fairness. And it's about transparency, and it's about getting poorer citizens a better deal from the economies that they live and operate within. So a sustainable future is very critical to our world, and clearly this toolkit with its notions of both sustainability and inclusivity really speaks to both of those objectives very, very strongly. So we're very happy to have supported that. We must never forget that the cost of banking crises is just immense, and when those happen, those costs fall disproportionately on the shoulders of poorer people. And so it is developmentally incredibly important that we focus on financial integrity as part of this. And one of my hopes with this toolkit is that whilst it's obviously focused very much on the financial inclusion area, which is excellent, many of the principles and many of the sort of structures that it refers to are equally applicable further up the financial food chain. And so one of my hopes is very much that the central bankers and all those other members of AFI are able to take this toolkit out of the financial inclusion space and share it with their colleagues who are more closely involved on capital markets development, for example, or infrastructure finance, and apply some of those insights to those other areas. So I think for us, in terms of market facilitation, I mean, really, the issue for us is all about how can we get large, multiple stakeholders behind the idea of a common vision. And I think that's one of the things that came through from this toolkit, is that it's very important to start this whole journey with a common vision that everybody can rally around. And what we found in many different areas of financial sector development is that it's often very difficult to achieve that, because primarily, well, very often initially because of a lack of trust. And so having a neutral market facilitator who can bring different agencies, different stakeholders together, private sector, government, even obviously departments within government, different parts of the government machine. If we can create a sort of safe and place as a neutral facilitator that people can have a constructive dialogue in, that I think has been shown to be very important. And along with that comes the provision of data, which is exceptionally important. So data on which everybody can rely, and which is then made available to the people who need it most. So market facilitation is really about managing multiple stakeholders, bringing multiple stakeholders behind this common vision, and sort of using that vision-making process to galvanize action. And that's what that's what we are really in business to do. We are operating across the whole of Africa, and I know that there are many people on this call who are in Africa, and my thanks to everybody in East Asia for staying up to listen to this call. But I hope that doesn't sort of put you off really, the fact that we're actually only operating in Africa. But nonetheless, as Mariam said, part of the challenge we have now is that it's not the fact that we have an absence of global standards, it's actually the implementation, and that's where the hard graft starts really, is sort of managing processes of change within countries that we often find are very, very difficult to get going. So we are able to provide that support to central banks by providing the technical assistance to help these processes happen, and we're very prepared to do that. The toolkit is really key for all of this because it is, for a start, it's very readable and it's very accessible, and I really congratulate the authors on that. But I think there's some really excellent parts of it. I really like the case studies. So this is where central banks and others have really experienced the challenges firsthand and have found ways to overcome those. I think that's excellent. I think the practical guidance around some of the knotty issues that are there, the proof of address issues, the data collection challenges, data collection storage challenges, how to implement RBA. I think some of those sort of things would be the very first things that anybody would want to go to see how to do it. And so I think it will be a very valuable tool for all of us as we go about our business, both the users and also people like us who facilitate those discussions. So I would strongly encourage anybody from the African members present just to get in touch with us, and if you want to take this further, we would be very happy to see what we can do to provide some further support. So with that, I'll stop. But thank you very much, Robin, for the invitation.
Thanks very much, Mark, for your comments, your suggestions, and indeed your support through this process. Now, time is a little against us, but I would like to get some audience questions in. So I'm hoping you'll be okay if we do need to run 5 to 10 minutes over our allotted finish time. And I'm going to start straight away with a question that's come in from Daniel. And Daniel is asking, in a case where AML-CFT goals conflict with financial inclusion, which takes precedence? So we've talked about complementarity, but are there examples where actually we're just faced with a difficult trade-off? And Daniel is giving the example of a transaction limit, for example, on a mobile money account. Maybe financial inclusion would favor one particular limit, but AML-CFT prioritization might lead to a different outcome. So I'd like to invite actually Shana from FATF Secretariat to address this one, please.
Thanks, Robin. And it's a great question from the floor, so thank you for it. I guess I would think about it in terms of not what takes precedence one over the other, but how you can find a good balance between the two. And so I guess it's also in situations, I mean, not every situation where we're talking about financial inclusion is necessarily a low risk money laundering, terrorist financing situation. But that doesn't mean that, you know, authorities can't deal with that. There is no kind of copy and paste solution. When we're talking about financial inclusion, we're not just talking about simplified due diligence in all cases. When we're talking about, for example, remitters, and they're sometimes remitting monies to countries that, you know, the FATF or particular countries might consider to be high-risk jurisdictions, but they do provide essential financial services. How do authorities deal with that? And I think there needs to be, I guess, rather than thinking about this as a competition between the two ideas, to think about ways where we can be creative and facilitate both financial inclusion by also managing and mitigating the risks. And a lot of our guidances talk about that. I mean, not just about the due diligence mechanisms, but also the ongoing monitoring, the mitigation measures, but also, you know, there are lots probably in this toolkit and others, you know, innovative measures that governments have put in place to actually address some of the risks.
Thanks very much, Shana, for that answer. I'd like to bring in a question now from Diane Bizimana from Burundi National Bank. And Diane is asking, for those who have succeeded in inclusive financial integrity, how do you comply with FATF standards as the latter are used as required criteria? So maybe I'll invite Ramizul from Bangladesh Bank perhaps to comment on this one. So maybe in the context of your mutual evaluation, for example, Ramizul, how do you ensure that the financial inclusion measures you're implementing are not contradictory to any of the FATF standards? Thanks.
Okay, thank you for the questions. So if I use my mutual evaluation experience, so we actually, first of all, we are not compromised with the risk. So in our mutual evaluation, especially in the NRA, we identify or assess all the products. So which are the risky products and which are the less risky and no risky products. So in that way, we actually categorize the products. So financial inclusion products, it is almost no risk. But even though to comply with the FATF recommendation, because FATF is not against the financial inclusion. First of the thing that we have to convey this message, that FATF is not opposite of the financial inclusion. So Bangladesh, like Bangladesh, the developing countries, so the vulnerable group of peoples, they are away from the financial system. So if they incorporate in the financial system, so we need some gateway to incorporate them in the financial system. So we identified this segment and we assess the risk of their risk assessment. So we find out that if we consider their occupation, if we I mean the background study of their profession, transaction limit, so these all are the very minimum. So in that context, they are the less risky products. So in that case, the FATF recommendations are not against the, but one recommendation regarding the terrorism and terrorist financing, the sanction screening. So we actually recommend all the financial institutions that you have to screening each and all the account holders. So in that case, financial inclusion products as well as the normal products, they all screen the products. So it is, and we make it very easy for them. They use the software. So IT-based software is there to screen the products. So it is not against the FATF recommendations. So and other recommendations, that is the record keeping. So record keeping is mandatory for all the products, even it is the financial inclusion products. And the reporting, we make it mandatory for the reporting, and it is a risk-based approach. So if in any case, in the financial product like MFS accounts also, even in the farmer's account also, a large amount of transaction is taken place, and if it is a suspicious one, so they immediately report it. So how it is not against the FATF recommendation is that when we are assessed, then some of the evaluator, they mentioned that why your STR or SCR is so small number of STR and SCR is reported by them. If large number of STR and SCR is reported by them, meaning is that they are compliant. So might be there is no crime, but reporting is huge, so that FIU can assess whether there is a crime is taken place or not. So nowadays we are experiencing a large number of STR or SCRs coming from the MFS and other sector also. So it is comply with the FATF recommendations, and it is not against the financial inclusion also. Thank you.
Thanks, Ramizul, for providing that clarity and context. And there's just two more questions I'd really like to get in before we have to wrap up. So the first question is coming from John, and it's addressed particularly to Barry. In your presentation, Barry, you've highlighted the importance of achieving alignment on outcomes and not just focusing on inputs. So should outcomes-based approach be where the focus is? So Barry, if you'd like to comment on that question, please.
Yeah, so you're right. So focusing on the risk can also, what it does do is it leads to a whole continuum of rules-based and variations on rules-based, ultimately ending up with outcomes-based. And so I think the focus on outcomes is the correct focus. The process to get to those outcomes is a risk-based approach. So I would definitely agree that the outcome is where we need to focus. The risk approach is the methodology, and that should be in time shrink this continuum to more outcomes-based outcomes-based systems in countries. I think the reliance on outcomes, as in things that you can tick off, is a serious issue. In that we start counting documents and we start counting compliance, and not what really is important. And I think it's defining those outcomes and defining what success looks like in terms of those outcomes that's critical. Because otherwise we do get a whole warehouse full of documents, and our money laundering, terrorist financing risk is it doesn't have any meaningful restrictions on it.
Thanks a lot, Barry. And the last question is from Nafisa, and it's directed to Shana again, and it's in relation to digital financial services, which we can see are becoming increasingly key in many parts of the world to achieving financial inclusion outcomes. So how does DFS really impact on AML-CFT? Are you concerned about new risks, or are there ways as well that the technology can be an ally to your agenda? Thank you.
Thanks, Robin. Again, a really great question. And this is one we've considered a lot in the FATF. And actually, we have a new presidency of the FATF, a German presidency, and we're about to launch a number of projects on digital transformation, looking at some of these opportunities, but also the risks. And like one of the other panelists mentioned, it is kind of a double-edged sword, something that you need to look forward to look at the opportunities, but also to measure the risks and take care of them. Something that we've seen is a lot of the kind of fintech companies, or sort of some of the newer digital financial service providers, are actually much more tech savvy when it comes to data and being able to mitigate AML-CFT, to mitigate MLTF risks. So that's actually quite a positive thing, because they're able to look at all the data that they have and see actually how best they can identify suspicious activity, how they can understand the nature of their business with their client. So compared to some of the other financial institutions that have these sort of legacy systems and a lot of data, but not necessarily, haven't necessarily found ways to use that data in the best way possible, some of these newer companies are actually looking at that and kind of advancing this. But it is very important to supervisors to set that standard and to make sure that they emphasize to these newer companies that these are the regulations in place and that we need to find a way to innovatively meet the standards that are required as well. So like many others have said, lots of opportunities out there, but we need to make sure that the risks are mitigated as well.
Thanks so much, Shana. And so I'm afraid we have completed our allotted time, but I'm pleased we have been able to answer all the questions that have been posted on the chat board here. If you have additional questions that couldn't be covered today, please let us know and we'll get in touch with the panelists directly. So I think this has been incredibly rich and valuable discussion with a lot of food for thought. I won't try to summarize all of the key points, but I think that a few that came across very strongly. One, an area that the toolkit identifies as key, which is really the alignment in terms of the vision between financial inclusion and AML-CFT stakeholders. It really does start there, and then from that point, alignment in the processes and the activities can follow. I think as well the importance of interagency coordination and the role of data in that coordination process has really been highlighted. And we've agreed that a common enemy, if you like, for both financial inclusion and AML-CFT is the persistence of large proportions of the population reliant only on informal services where they don't benefit from either good levels of consumer protection, but also where risks to financial integrity can go undetected. We've talked about the potential benefits of technology in getting this alignment better, and also the practical role that peer learning, including through the use of this toolkit that has been publicized today, can play. But it's been really evident too that the process does not stop here. The toolkit is just the start, and the hard work of implementation begins from this point. And I think that is a good point actually for me to pass over to Madhu as our head of capacity building. And we can see that the capacity building initiatives in this area are going to play a key role in disseminating the contents of the toolkit and ensuring they are implemented practically. So thanks everyone for joining, and I'll pass to Madhu for the wrap up.
Thank you, Robin. And thank you so much to all our panelists for your rich contributions. I'm sure all of us here have some new learning to take back home today. We indeed value your feedback and request your detailed feedback in our evaluation form. Hamizim, if I may request you to please show the link for the evaluation form, please. And this is because, as Robin mentioned, that we will be taking this forward in our in-person trainings, and we also plan to develop online courses based on this toolkit. And your feedback on the toolkit, on the discussions that you heard in this webinar, your thoughts, your experiences would, of course, be very invaluable to us to help us design those trainings, the content and the delivery. So thank you in advance for sharing your thoughts already. Thanks again to all our panelists and members of the Global Standards Proportionality Working Group for your contribution to the toolkit, and particularly for joining us in this webinar today. Thanks also to the AFI team and our interpreters too for a smooth delivery of the session. And most importantly, thanks to our audience for joining us, for all the questions, for all the posts, and for the many downloads that we already see that has happened from the toolkit from the AFI website. Keep using the toolkit, and please do keep in touch with us and keep sending back your feedback, as we would be eagerly waiting to hear from you. And with that, we would end the session here today. Please take care and stay safe. We'll keep the link for the evaluation on for some time as we wait to get your feedback. Thank you so much.